All right, welcome everyone. Welcome to chapter 9. This is we are using Focus on Personal Finance book, uh, owned by, in terms of copyright, by McGraw-Hill, 2022, by Kapoor, Rabel, Hughes, and Ahmed. And chapter 9 is a chapter called Health and Disability and Income Insurance. Okay, let's start this chapter. That's quite a long one actually, about 56 pages. So we have about 6 objectives. Number 1, recognize the importance of health insurance in financial planning. Number 2, analyze the costs and benefits of various types of health insurance coverage as well as a major provision in health insurance. Number 3, assess the trade-off of different health insurance plans. Number 4, evaluate the difference among healthcare plans offered by private companies and by the government. Number 5, explain the importance of disability income insurance in financial planning and identity the sources. Number 6, explain why the cost of health insurance and healthcare have been rising. Okay. For Canada, the health is covered by OHIP. If you are not a permanent resident or citizen, then you need to get your own personal health insurance, usually by Canadian Health Sales or Sun Life or Manulife. Okay, let's start this chapters. The objective number 1: health insurance is a form of protection that is a financial burden the people may experience as a result of illness or due injury. What are you gonna do? You're gonna pay a premium or fee to the insurance and return the insurance pay most of your medical costs. Health insurance include both medical expense insurance and disability income insurance. What are they? Medical expense insurance typically pays only the actual medical costs, or disability income insurance provide payment to make up for the sum of the income of a person who cannot work as a result of injury or illness. Okay. Let me just make sure. Where is it going back there? Back. Group health insurance. Okay. This is mostly have a coverage under group plans, usually employer sponsored, meaning the employer offered the plans and typically pay some of all the premiums, cover you and your immediate family. Okay. The Affordable Care Act 2010, which is ACI, requires employer to provide health insurance coverage for all employees. Okay. And a HIPAA, and this is in US. Okay. And we have Canada is a different one. We have our own way, which is called OHIP. Ontario, for Ontario, it would be OHIP. Okay. Uh, it sets a standard, federal standard, to ensure the workers would not lose their health insurance if they change the job, and protects against discrimination in health coverage based on certain health factors. Individual health insurance, some people do not have access to employer-sponsored group insurance plan. So, such as what is that? Self-employed individual, and then employer simply doesn't offer it. That's the key part. If you are self-employed, you have to buy your own. Okay, and some companies do not offer health insurance because it's too expensive. It's about the cost of health insurance for the employees about 20 to 25% of your base salary. Okay, health and other life insurance. Okay, most of them is covered like that. In these cases, individual health insurance may be in the answers. You can purchase directly from a company of your choice, such as Sun Life. Here will be Sun Life, Manulife, Great Life, Westlife, whatever insurance company that you can that offered you, or Canadian Shield, or Blue Cross and Blue Shield. Plan usually cover as you as an individual for you and your family, and rates can be varied. What is COBRA? COBRA stands for if you are covered under your employer health plan and you lose your job, have your hours reduced or get laid off, you and your dependents may require to purchase temporary health coverage called COBRA at group rates under employer's plan. But the problem is that not everyone offer COBRA, and the coverage may be quite expensive. General COBRA of group health plans maintained by employees of 20 or more employees. If COBRA, not everyone offered this COBRA. Group health plan is required to provide you with a written notice indicating that you are eligible for COBRA coverage. You have 60 days from the date of the notice is sent from the date of your coverage and whichever later. We call it COBRA. And for objective number 2, basic health insurance coverage includes hospital expense coverage, surgical expense coverage, and physician expense coverage. What are these? Hospital expense coverage is pay part of all the hospital bill for room and board and other charges. And most policies set a maximum amount that will pay for each if you are in hospital. Surgical expense insurance pay all part of all the surgeon's fees for explorations and specify the maximum benefit for each services. Physician expense practice provide benefits for doctor's fees for non-surgical care, X-ray or lab tests, and specify the maximum benefit for each service. So these are the definition: hospital, surgical, and physicians. Okay. And then the major medical insurance coverage usually pays the large costs involve long stay in the hospital or multiple surgeries. Maximum benefit can reach 2,000 to up to 1 million per illness per year. Most major medical plans require deductible. Some include co-insurance provisions and also include stop-loss provisions. Okay. Hospital indemnity policy pay benefits when you are in hospital, but this policy do not directly offer medical costs. You will be paid in cash which you spend on medical or non-medical expense as you choose. The types of health insurance coverage, such as dental expense insurance. This is the most common one. The dental is very expensive in Canada, guys. But now, for low income, you can get coverage. But dental was one of the most expensive insurance coverage. Okay, provide reimbursement for the expenses for dental service and supplies. Encourage preventive dental care. Normally provides oral examinations, filling, extraction, oral surgery, dentures, and braces. Okay, and some company do not, and in plan usually do not cover. Okay, in plan do not cover by insurance. You have to buy extended benefit. Excuse me, let me get this sip of water. And then vision care insurance may also cover eye examination, glasses, contact lenses, eye surgery, and treatment of the eye disease. And then rare disease insurance play upon various affairs, and it is illegal in many states. Covered only specific conditions which are fully covered if you are insured under a major medical plan. Okay, long-term care insurance provide a day-in, day-out care for long-term illness or disability. Is useful whether you are required to do a lengthy stay in nursing home or just need help from home in the daily activities such as dressing, bathing, and household chores. It has an annual premium of less than 2,000 or over 19,000 to over 19,000. So between 2,000 to 19,000, depending on your age of the coverage. According to the expert, the long-term care protection makes sense for the people of net worth for 100,000 to 2 million. So this is for the people that has requires a net worth of 100,000 to 2 million. If you high net worth individual, put it that way, then you require a long-term care insurance. Typically, individual insurance plans are sold within 50 to 80 years age group. It pays benefit maximum 2 to 6 years and carry a dollar limit on the total amount they will pay. The provision. There are provisions in each policy. In terms of eligibility, people covered by the policy must meet specified eligibility requirements such as family relationship for children and certain age. Assigned benefits. You are reimbursed for payment when you turn in your bill and claim the forms. Claim form. There's internal limits. A policy with internal limits sets specific level of repayment for certain service. There's as well copayment. Copayment is a flat fee that you pay every time you receive a covered service, such as example $20 or $40. The service benefit policy with dispersion list coverage in the service, not dollars amount, always prefer $2 amount of coverage. Major provision in health insurance policies such as benefit limits defines a maximum benefit either in terms of dollar amount or in terms of number of days spent in the hospital. Exclusion or limitations specify the service that the policy does not cover. Guaranteed renewable. Insurers cannot cancel the policy unless you fail to pay the premium. Forbid insurers from raising premium unless they raise all premium for all members of your group. Cancellation termination. Explain the circumstances under which the insurer can cancel your coverage. Also explain how you can convert your group contract into individual contract. So, objective number 9, reimbursement versus indemnity. What are the things, the definition? Reimbursement policy means pay you back for actual expenses. Indemnity policy means provide you with specific amount regardless how much the actual expenses may be. But most of them are reimbursement policy. Example, reimbursement versus indemnity. Katie and Seth both charge $200 for office visits for same specialists. Katie reimbursement policy has deductible $300. Once he had met the deductible, the policy will cover the cost of such a visit. Saying the policy will pay him $125, which is what the plan provides for a visit to any specialist. Okay, that's the key part. This is the difference, guys. Let me just go back. Oh, yeah, check this. Internal limit versus aggregate limit. There is policy with internal limits means will cover only a fixed amount for an expense such as the daily cost of room and board during a hospital stay. Policy with aggregate rates will only limit only with the total amounts of coverage, or it may have no limits. Okay, coverage trade-off, deductible and convenience. Deductible is a set of amount of policyholders must pay toward medical expense before each company pays benefits. The condition provisions state that what percentage of medical expense policyholders must pay in addition to the deductible amount. Out-of-pocket limits. Some policy limit the amount of money you must pay for the deductible and co-insurance. After you have reached that limit, the insurance company covers 100% of any additional costs. The benefit is based on reasonable and customary charges. Some policies consider the average fee for service in particular area. Then they use the amount to set a limit on the payment of the policyholders. Okay. What kind of coverage will you use? Okay, the type of coverage you can choose depending on the amount you can afford to spend on the premium. Number one, level of benefits that you can feel free or you want or you need. And number three, the kind of coverage that your employer offer if you're covered by your employers. You can always buy basic coverage or medical coverage on both basic and major medical coverage. When I was with BMO and RSA, they gave me coverage of this healthcare, major medical, and basic. Usually they have a basics. For example, let's say orthopedics. They give me a basic coverage of $200 for every visit for the shoes. So if I want to increase, there's to be additional healthcare coverage. So I have to add additional premium to pay. Okay. Same thing like dentist, dental. They only give a coverage up to let's say, for example, for orthodontics for the bracelet, they are not covered under regular benefits, but you have to pay additional optional coverage to increase your coverage. Okay, this is a typical option. You have the basic plus extended coverage. It is basically another option to purchase a comprehensive major medical policy that combines the value of both plans in a single policy. This is the most common one. Exhibit 10.1. Okay, example. A health insurance plan should cover basic coverage for hospital and doctor bills, provide at least 120 days of hospital room and board paid in full, pay at least 80% of out-of-hospital expenses after a yearly deductible of $1,000 per person and $2,000 per family, and impose no unreasonable exclusions. And limit your out-of-pocket expense to no more than $8,000 to $9,000 per year, excluding dental, vision care, and prescription costs. And then, although your healthcare insurance plan vary greatly, all plans should take the same kind of basic features. Would you do anything like that? Let me go back. That must have. Okay, this is the most common things. Okay. Usually, like hospital, you're gonna have an economic room. Okay, not the VIP room. That's one of the good example there. Number 4, objective number 4, private healthcare plans and government healthcare programs. Private healthcare programs, such as private insurance company, provide mostly group health plans for employers, which it in turn offer them to offer to their employees as benefits. Hospital and medical service plans, such as Blue Cross and Blue Shield, BCBS, are statewide organizations like private health insurance, but each state has its own BCBS. Okay, this is mostly in the U.S. HMO, which is Health Maintenance Organization, or health insurance plan that provide a wide range of healthcare service for fixed prepaid monthly premium. There's an exclusive provider organization, EPOs, or hybrid health insurance plan, in which services are covered only if the plans network providers are used in case of an emergency. Okay, private healthcare plans, PPO, are a group of doctors and hospitals that agree to provide healthcare at rates approved by the insurers. Home healthcare agencies offer medical care and in-home settling in agreement with medical order on often a fraction of the cost of capital. This is for home health care. There's also employee self-funded health plans that are used when company choose self-insurance and company runs its own insurance plan, collecting premium from employees and paying medical benefits as needed. Health Saving Plan, HSA, it's a Health Reimbursement Plan, HRR, and a flexible spending account. This is the most common now in Canada. Flexible spending account. Usually, you are given about $200 to up to $500, depend on your company. They have their own rule and how many spend, how can it be spent, how it can be taxed. Okay, let me just go back. This is done. This is an example of the healthcare comparison: HMO, EPO, PPO, and point of service. What's the cost? It's the lowest HMO and lower than PPO. Highest of all. PPO is the highest, private healthcare. Okay, point of service. So PPO is always the highest. Do I have to use provider in the network? Is usually yes, PPO, and the only PPO is no. And here point of service also no. Do I have to choose a primary care physician? Yes and no. Here is no and usually. Do I need a referral service? Yes here. HMO usually need a referral. Let's say you want to see a specialist. Let's say internist. You want to see heart doctor, surgeon. Okay, you need to have a referral, such as here. Okay. Another comparisons here, which is HSA, FSA, and HRAs. HSA is called Health Saving Account. FSA, which is Flexible Saving Account Arrangement, and HRA, which is Health Reimbursement Account. So HSA is set aside tax dollars you can use to pay medical expenses that are not covered by the insurance. Okay, tied to high deductible policy. Unspent money can be carried over and accumulated year to year, and can invest the fund in stock, bonds, and mutual funds. The Ghani grow tax-free, but can be spent only on healthcare. You own your own funds, but you can take any unspent fund with you, and you live with the employers. Flexible, FSA, employer-sponsored, set aside tax dollars, and not tied to any high deductible policy. Money left over can be always carried over. Okay. HRA, which is Health Reimbursement Plan, is employer-sponsored, funded solely by your employers to spend your healthcare. Reimbursement of claim is tax deductible for employees, tied to high deductible policy. The maximum annual contribution is driven by your employer and plan documents. Can carry over unspent money from year to year, and premiums tend to be lower than the traditional insurance but higher than HSA. So this is a typical comparison between the three arrangements. Okay. These are government healthcare programs. Medicare, this is US. Medicare is always US. It's a federally funded healthcare insurance program for people over 65 and to the people with disability. Constantly in financial trouble, project to be bankrupt in 2035 if no changes are made. So it's going to be aiming for bankruptcy because of the high costs. Balance Budget 897, create new Medicare Choice program, allow Medicare members to choose managed care plan in addition to their medical coverage. Again, the health insurance coverage discussed so far is not purchased through private companies. Some consumers, however, are eligible for health insurance coverage under program offered by federal and state governments. So it depends on your state. For like in Canada, it's through OHIP. For Medicare, there's four part of Medicare, such as hospital insurance, Part A, and medical insurance, Part B, and medical advantage plan, Part C, and prescription drug coverage, Part D. So this is mostly in the US, Medicare, okay? And then financial practice, you need to understand this. Medicare is for the people that are over 65 and with certain disability. Okay, this is give you a summary, give you an idea. This is a context group as well. And Exhibit 9.4, the original of Medicare here, liquid options, and there's a medical care health organization plan as well here. Give you a summary of what you can do and you can do. There's a plan description as well. Like original Medicare, you can choose your medical healthcare providers. Here, the other one, difference, you must live in planned service area. So it's different way of doing things, okay? In terms of summary. And preferred providers work like HMO, but you have the choice to see a healthcare provider out of the network. If you do not see out of the network provider, you will pay a high premium, high expenses. Provider sponsor organization work like a Medicare, HMO, except a network, manage all healthcare, and provides doctor and hospital rather than an insurance company. And of course, you got a private for fee. It pays a lump sum here in terms of the insurance health plan and provides and bill more than what the plan pays, and you're responsible for paying the balance. The plan may offer more benefits than the original Medicare. Okay. MSA, medical saving account, is a special type of saving account that can be used to pay medical bills. The Center for Medicare and Medicaid make any lump sum deposit into enroll account and can deposit funds into this account. Okay. What is Medicare? It is what is not covered, such as deductible co-insurance payment. There's certain type of skilled long-term nursing care. Out of hospital prescription drug is not covered. Also routine checkup, dental care, and most immunizations, and limit amount of paid covered service. Medigap, insurance supplement, Medicare by filing gap between Medicare payment and medical costs are covered by Medicare. So this is mostly in the US. Medicare and resources, Medicaid is a medical assistance program offered to certain low-income individuals and families. Okay, this is for low income. Administered by a state and is financed by combinations of state and federal funds. Unlike Medicare, Medicaid's coverage is comprehensive that people with Medicaid do not need supplemental insurance. Other sources as well. You can get help from the state to pay for your Medicare premiums. Medicare Saving Program also pay for Medicare Part A and Part B. It's for program all-inclusive PACE, program of all-inclusive care for elderly. Okay. Again, this is a new act, Health Insurance and Pension Protection and Affordable Care Act of 2010. The key provision of this act is set aside $635 billion over the next 10 years to help health care reform. This law is very expensive and implemented over several years, and there's a major provision in January 2014. Okay, and then this is the key provision: offer tax credit for small business benefits, provide denying coverage to children with pre-existing conditions, and then provide access to affordable insurance for those who are uninsured because of pre-existing conditions, ban insurers from dropping people from coverage when they get sick, and limit co-payment and for preventive marriage service and exempt preventive service from deductible under Medicare programs, and it requires new health plans to allow young people up to their 26th birthday to remain with their parent insurance policy, prohibit health insurance company from placing lifetime caps on coverage, and restrict the use of annual limits to ensure access to needed care in all plans. Require new private plans to cover preventive service with no co-payment and with preventive service being exempt from the deductible. And ensure that consumers in new plans have access to effective internal and external appeals, and provides aid to state in establishing office and of health insurance consumer assistance to help individuals with filing complaints and appeals. Provide new investment to increase the number of primary care practitioners as well, and requires health insurance company to submit jurisdiction for all requested payment increases, and create state-based health insurance marketplace or co-insurance exchanges, expand the medical care program for nation's poorest individual, and requires employees with more than 20 employees to provide health insurance to their employees and pay penalties. What is subsidized coverage on this one? Also available is provide numerous rights for protection along subsidy through premium tax credit and cost-saving reductions such as Medicaid and Children Health Insurance Program. And Health Insurance Marketplace starting 2014 allow you to compare healthcare plans to get equations. Okay. Also makes buying healthcare coverage easier and more affordable. Number 5, disability income insurance provides payment to replace income when an insured person is unable to work. Provides regular cash income when you are unable to work because of pregnancy, non-related accident, or illness. Exact limitation of disability varies from insurance to insurance. Many people make the mistake of disability insurance, not realizing that very important insurance to have. Disability can cause even greater financial problem than death. Workman compensation in terms of source of disability income coming from workman compensations, employer plans, social security, and private income insurance programs. So these are the 4 sources of disability income. Okay. And the trade-off will be waiting or rehabilitation period. There's a duration benefit as well. There's the amount of benefits and the accident sickness coverage as well as guarantee renewability. This is your disability income need in terms of the coverage. Okay, give you an idea in terms of the money amount after waiting and for the period. Again, this is based on the US one. It's not in Canada. Okay. Number 6, high medical costs. US has the highest per capita medical expenditure of any country in the world, spending twice as much of healthcare as the average 24 industrial country in Europe and North America. So healthcare has estimated $1 trillion about 4.26 trillion in 2021. In 2020, healthcare spending as a percentage of gross domestic product was 17.8%. An aging and overnight population, the cost of prescription drugs, the growing number of uninsured, and advancement in medical technology all contribute to the rising costs. Average costs consume nearly 46% of healthcare dollars. So give you an idea of the here from 19 to 2010. Oh my God, this is very high cost. Keep ballooning. It's like a step. It's like a mountain there. So high. Why is it the healthcare cost so much? Because of the sophisticated, expensive technology. In the old days, you don't have MRI. Now you have MRI, and there's a duplication of tests sometimes. Because of the similar result. Increase in variety of frequency of treatment, such as allegedly unnecessary tests, and increasing number of rigidity of elderly people as well. Regulation result in cost shifting rather than cost reductions. Increase the number of accidents and crimes that require emergency medical service as well. There's a limited competition and work rules in the healthcare delivery system. Okay, and then there's also labor intensiveness because of the rapid earning growth for healthcare personnel is going up, using more expensive medical program, such as emergency room with a bell code. As there's also inflation in healthcare delivery system, there's also an aging baby boomers who use more health service. There are also other factors such as fraud, administrative waste, malpractice insurance, and etc. So all those details just create high expensiveness. In private sector as well, such as employers, labor union, healthcare, insurance healthcare professionals, and consumers have undertaken a wide range of innovative activities to contain costs of healthcare, including carefully reviewing healthcare fees, incentives to encourage preventive care, community of health planning, and prepared good practice, and other alternatives to fee for service. Community healthcare programs, paying cash for routine medical care and lab tests. There's also a concept of flexible. What can you do to reduce personal healthcare costs? You need to consider flexible spending accounts, such as considering high deductible healthcare, use generic medicine. This is the most common now in Canada, using generic medicines. Consider using mail order for online pharmacy as well. Most states offer free or low-cost coverage for children under 19. There's a pharmacy assistance program as well. Ask if the follow-up visits are necessary. Think carefully about non-urgent procedures. Review statement for billing errors. Appeal unfair decisions by your health plan, and practice preventive care and stay well. Okay, the best way to avoid high costs of illness is to stay well. Eat a balanced diet. Avoid smoking. Do not drink to excess. Get sufficient rest, relaxation, and exercise. Drive carefully and watch out for accident and fire hazard at home, and protect yourself from medical ID tab. So that's basically conclude this chapter. So let's do a chapter summary. Chapter summary is recognize the importance of health insurance in the financial planning. The detail here given to you is health insurance a protection that provides payment of benefits for covered sickness or injury. Okay. Health insurance should be part of your overall insurance program to safeguard your economic securities. Health insurance plans can be purchased through many group insurance, health insurance, and individual health insurance, and COBRA. Chapter 2 summary. Analyze the cost benefits of various types of health insurance coverage as well as major vision health insurance policy. There are 4 basic types of health insurance available, such as hospital expense insurance, surgical expense insurance, physician expense insurance, and major medical expense insurance. These are the major provisions in health insurance policy include ID requirement, assigned benefits, internal limits, co-payments, service benefits, benefit limits, exclusion and limitations, and guarantee and renewability, as well as cancellation and terminations. Chapter number 3, summary. Assess the trade-off of different health insurance plans, such as reimbursement, internal limits, deductible, and co-insurance, out-of-pocket limits as well, benefits based on any reasonable and customary charges. Number 4, evaluate the summary. Chapter summary, evaluate the difference among healthcare plans offered by private companies and by the government. The health insurance and healthcare are available from the following: private insurance company, hospital, and medical service plans such as Blue Cross and Blue Shield, HMO, PPOs, POs, and home healthcare agency, as well as employer self-funded health plans. And number 4, evaluate the difference between the healthcare plans offered by the private companies and the private government, such as one of the well-known is Medicare and Medicaid. Number 5, chapter summary, explain the importance of disability income insurance in the financial planning and identity of its source, such as disability income insurance provide regular cash income lost by employees as a result of an accident, illness, or pregnancies. And source of disability income insurance include the employers such as security, worker compensation, and private insurance company. Number 6, explain and why the cost of benefit health insurance and healthcare has been increasing. Okay, what are the reasons? Because of rate of insurance, the cost is going up. There's the reason because of expensive technologies, duplication of tests, increased frequency, unnecessary tests, increased number of longevity, regulated that shift other reduced costs, increased number of accidents and crimes, limited competitions, rapid earning growth among the healthcare professionals, and built-in inflation in healthcare system. So that's basically conclude this chapter. So I will upload this in YouTube as well as provide this in a puzzle for your interactive learning. Thank you, everyone. Bye-bye.